In the crypto space, there's been speculation for years about Bitcoin getting flipped by an altcoin and never reclaiming that number one spot again. Obviously, XRP has flipped Bitcoin in the past. It was short lived, yes, but the key point remains. XRP has already proven that it's capable of doing it. That matters more than people want to admit. Now, if we go back to 2021, there was massive speculation around Ethereum becoming the new king. But when I look at how this space is evolving today, I believe XRP deserves to be part of this conversation, especially when we're talking about older coins with real staying power. And the reason for that comes down to one word: change. Over the last year and a half alone, we've witnessed some of the most dramatic shifts in crypto history. Regulations are forming, clarity is becoming a real discussion, and utility is clearly emerging as the next phase of this market. Bitcoin is currently sitting around a 1.8 trillion market cap, and it has done exceptionally well. There's no denying that. Bitcoin was the first. Without Bitcoin, none of this would exist. It was the test, and the test worked. That success paved the way for everything else we see today. Now, before we go deeper, this is exactly why positioning early matters. Inside the 100x Club, you'll get exclusive weekly stock alerts for potential 100x stocks, crypto insider alerts, millionaire mindset principles to build generational wealth, top 1% positioning strategies, the 100 stock formula, and how to truly 100x your wealth over time. It's all in the pinned comment. Now back to Bitcoin. The craziest thing about Bitcoin is that it reached this level of market cap with practically zero utility. Yes, you can send and receive payments using Bitcoin. Sure, that counts as utility. But let's be honest and logical here. Why would the world rely on a slow, expensive network when faster, cheaper, and more efficient systems already exist? That's the real question. I don't care whether Bitcoin technically has utility. That's not the debate. The real debate is, what does everything Bitcoin does but better? And that's where XRP enters the conversation. XRP settles transactions in seconds at a fraction of a penny. It was designed for efficiency from day one. It also launched with a built-in decentralized exchange, something Bitcoin never had. On top of that, XRP is a powerhouse for payments and tokenization, which just so happens to be where institutions are clearly headed. Despite all of this, people still laugh at the idea of XRP flipping Bitcoin. They'll say things like, "There's no way XRP can reach a $1.8 trillion market cap," or "It's impossible for XRP to overtake Bitcoin." Honestly, that mindset is outdated. It's comical when you step back and really think about it. We live in a world where global financial systems are being rebuilt in real time, yet people still think certain outcomes are impossible. Times are changing. And again, XRP already flipped Bitcoin once before. That's a historical fact. I mentioned this recently, and I'll say it again. The probability of XRP flipping Bitcoin this time around is higher than it has ever been. Not because of hype, but because the entire market dynamic is shifting beneath our feet. Let's start with clarity. This upcoming week, we have the market structure legislation markup. Now, does that mean we instantly get full regulatory clarity? No. There are still multiple steps, processes, and potential delays. This could still get kicked down the road. We have to be realistic, but I remain optimistic that we see meaningful clarity by the end of Q1. I've said this repeatedly, Q1 is the critical window. We also just received another update from the US Senate Banking Committee. GOP Chairman Tim Scott is pushing forward on digital asset market structure legislation, aiming to deliver clear rules, protect innovation, keep development in the US, and safeguard national security. That's not bearish. That's foundational. Now, while this legislation isn't law yet, the commitment is there. Momentum is there. And that matters far more than people realize. Markets move ahead of clarity, not after it. This ties perfectly into what Stephen McClure, CEO of Canary Capital, recently said on Paul Barron's channel. His take aligned with what utility-focused investors have been saying quietly for years. McClure openly stated that utility tokens will outperform Bitcoin. He went as far as saying he's bearish on Bitcoin this year and believes October 6th marked the peak of this cycle. According to him, Bitcoin could still drop another 20-30% over the next 6 to 9 months before finding a bottom. More importantly, he doesn't expect Bitcoin to reach a new all-time high in 2026. That's a bold statement, but it's not baseless. Bitcoin has been relatively flat compared to where capital is starting to rotate, and that rotation is key. When capital rotates, it doesn't disappear, It flows, and historically, it flows into assets that offer more upside, more efficiency, and more real world use. That's where XRP shines. As regulation tightens and institutions demand compliance, speed, and scalability, speculative narratives lose power. Utility gains it. This is why the idea of XRP flipping Bitcoin is no longer absurd. It's logical. Bitcoin will always be important. It will always have historical significance. But markets don't reward history forever. They reward relevance. And relevance in the next phase of crypto will be defined by who actually solves problems at scale. Payments, liquidity, tokenization, interoperability. XRP was built for this environment, not retrofitted into it. So when people say Bitcoin is king forever, I don't argue emotionally. I just look at the data, the direction of regulation, and where institutions are placing their long-term bets. The game is changing, and most people are still playing by the old rules. Now, most cryptocurrencies are going to follow Bitcoin, right? That's just how this market has operated for years. Bitcoin moves and everything else reacts. But I do believe something different is happening beneath the surface right now. I believe a real divergence is forming, and the theme of 2026 is going to be specifically building real-world infrastructure. And at the center of that is tokenization of real-world assets, including stable coins. When you really think about where capital institutions and regulators are heading, this makes perfect sense. Any protocol that is heavily involved in real-world asset tokenization and real-world applications is going to stand out. That absolutely includes the XRP ledger. It also includes other projects building directly for enterprise and institutional use cases like Hydera. I believe these assets are positioned to diverge from Bitcoin during this cycle. Now, does that mean they're going to go up 3x, 4x, or 10x in 2026? Probably not. And this is where people often get confused. This isn't about hype-driven parabolic moves. I'm expecting more measured growth, low double-digit returns in 2026 for a small handful of crypto assets that fall outside of Bitcoin and its usual followers. But here's the key difference. While Bitcoin could be down 30%, these utility-based assets could still be positive or at worst flat. That's divergence. So yes, he's bearish on Bitcoin, but at the same time, he's extremely bullish on utility-driven projects. And this is where we start to see the real transformation of the crypto space. For years, Bitcoin has been pumped endlessly. Narratives, ETFs, store of value arguments, it's all been centered around Bitcoin. But now utility is starting to take over as the main driver of value. And it's not just one person saying this. Even Grayscale is aligning with this perspective. They recently said, demand for alternative stores of value and regulatory clarity. These are the two pillars driving crypto forward. That statement alone says a lot. Zach Pendle broke this down further on CNBC's Crypto World, explaining why macro forces and regulatory clarity remain the foundation of the digital asset market. And when you really listen to what he's saying, it reinforces this entire thesis. He explained that the bull market we've seen has been driven by two primary forces. The first is demand for alternative stores of value. There's a lot happening in crypto, new technology, new use cases, innovation across the board. But Bitcoin, as the largest asset, has primarily been driven by macro concerns, debt, deficits, and the risk of fiat currency debasement. That fear pushes capital into alternative assets like Bitcoin. And according to him, those macro imbalances aren't going anywhere as we move into 2026. But then comes the second pillar, and this is the important one: regulatory clarity. Blockchains at their core are financial technology. And financial technology requires comprehensive regulatory frameworks to protect consumers and the financial system as adoption grows. That journey toward clarity has been long, but it's finally taking shape. This is why I keep saying this is no longer just about Bitcoin. Bitcoin has done its job, it proved the concept, it opened the door. But hype and demand around Bitcoin, in my opinion, are starting to fade relative to where the real growth is going. Yes, you still have the usual Bitcoin maxi voices, Michael Saylor and others, but the market itself is evolving. We are witnessing a major shift in how these assets are being evaluated. Value is no longer just about narrative dominance or first mover advantage. Utility is becoming the value driver. Real usage, real integration, real demand from institutions and governments. That's where this space is heading. And this brings us back to that earlier post because there's something extremely important here. We recently got an update from Reese Merrick, a Ripple employee, confirming that XRP has secured clear regulatory status as a non-security digital asset in the United States. This was achieved through landmark court rulings, making XRP one of the very few cryptocurrencies with such definitive standing in the US. That is massive. Now, he also pointed out something equally important. While XRP itself has clarity, the US still lacks comprehensive regulatory clarity for the broader crypto ecosystem. And that lack of clarity continues to hold back US-based companies from fully innovating and thriving. Ripple as a company is actively advocating for better, more thoughtful regulatory frameworks to level the playing field and drive the next phase of growth. And they're optimistic that progress on legislation, like the Clarity Act, will deliver that much needed clarity in the near term. So let's step back and think about this logically. XRP already has clarity. That alone puts it in a completely different category than the vast majority of crypto assets. And when we talk about alternative stores of value, what are we really talking about? We're talking about assets that have survived, assets that have been around for a long time, assets that have lived through multiple bull and bear cycles. XRP has been around since 2012. That's over a decade. It has endured everything. Multiple market crashes, the SEC lawsuit, exchange delistings, FTX, regulatory attacks, and yet it has remained in the top 10 since inception. That kind of resilience is not an accident. Most projects don't survive that long. Most disappear. XRP didn't. And that matters, especially to institutions. When you combine longevity, regulatory clarity, and real-world utility, you get something very different from a speculative asset. You get infrastructure. As utility becomes the star of the show, it's logical to expect a much larger rise in XRP relative to the broader market. And to be clear, I'm not saying XRP flips Bitcoin in the next 12 months. I'm not saying it happens this cycle, but I do believe XRP has a very real chance of eventually becoming the number one cryptocurrency. It already has one foot through the door with regulatory clarity. It's been battle tested over time. The utility behind XRP is massive. Payments, liquidity, tokenization, cross-border settlement. Institutional adoption is growing steadily, not explosively, but consistently, and XRP is right at the center of that growth. This aligns perfectly with what Ashish Bora said toward the end of December. As the CEO of Evernorth, the largest XRP digital asset treasury company in the world, he stated that 2026 could be the beginning of institutional DeFi. Think about that for a moment. Institutional DeFi doesn't run on hype. It doesn't run on memes. It runs on clarity, efficiency, compliance, and utility. And if that truly is the direction we're heading, then assets like XRP aren't just relevant, they're foundational. With regulatory clarity advancing, enterprise demand is accelerating. The next phase of digital assets will not be speculative. It will be institutional, global, and value-driven. And what's important here is that this isn't just one person saying it. Every major player is signaling the same thing. This market is no longer about speculation. Even Brad Garlinghouse reinforced this in his most recent post discussing how 2025 ends and how 2026 begins. The message was clear. Utility is the next phase of crypto. We are actively saying goodbye to the speculative era of this market, and that shift is exactly why we're starting to see a much larger push toward assets with real-world use cases. We're no longer focused on hype cycles, meme coins, or chasing the next 100x narrative. Just like Brad pointed out, the focus is shifting toward the long-term view. What crypto-based assets like XRP and RLUSD can actually accomplish in the real world. What we're witnessing right now is a full rewiring of the global financial system. The plumbing is changing. Legacy systems are being replaced. We are moving from traditional infrastructure to digital infrastructure. This is no longer about guessing which project might pump next. It's about facts. And the facts tell us that some of the largest financial institutions in the world are moving into tokenization. Major players are actively innovating using blockchain networks that can scale, comply, and operate at enterprise levels. This is not financial advice. Ripple is a perfect example of this shift. They continue to expand their entire technology stack with XRP positioned directly at the center. Their goal has always been to enable the Internet of Value, and XRP has always been and will continue to be the heartbeat of that vision. Payments, liquidity, tokenization, settlement. XRP sits at the core. Utility is now the main driver. This is no longer about Bitcoin dominance or speculation-driven value. It's about assets like XRP, like HAR, like XLM, networks that were built for real-world usage from the ground up. The next phase of crypto will be driven by utility-based value, not hype-based narratives. And this is exactly why I believe Bitcoin is starting to lose ground structurally. Bitcoin will always be important. It will always be foundational. But dominance is a different story. If Bitcoin dominance starts to meaningfully drop, it's hard to imagine it ever returning to the 60-70% range again. That was a product of an earlier market era. Too many people are still stuck in a previous cycle mindset. This market has changed drastically. Even the traditional 4-year cycle is clearly breaking down. If that model still held, we would have already seen the full bull run and alt season play out in 2025. But it didn't because the structure has changed. And that brings us to the next phase, utility. Regulatory clarity is the unlock. Once clarity is in place, utility can finally scale. Institutions can deploy capital confidently. Networks can be integrated directly into financial systems. That's where real value emerges. I've said this before, and I'll say it again. Today's XRP price does not reflect real value. It's still largely tied to Bitcoin speculation and market sentiment. That's not true valuation. Imagine what XRP's value could look like once clarity is fully established. Utility expands at scale, and institutional adoption becomes the norm, not the exception. That's what I'm focused on. I don't care whether we're in an alt season, a bull run, or whether the 4-year cycle should be doing something. I care about utility. I care about the long-term trajectory of this technology because at the end of the day, that's what we're investing in, technology. And technology doesn't stop. It evolves. It improves. It expands. Networks like the XRP ledger continue to be upgraded, refined, and positioned for global use. That's why I'm excited about what's ahead. I genuinely believe 2026 is going to be a strong year for XRP and other true utility-based projects. And utility should be the primary focus of every serious portfolio right now, especially as regulatory clarity gets closer and closer to becoming reality.